Hello there. Welcome back to Elements of Focus. Grant Soliven here today, along with Aaron Rheaume, my Director of Financial Planning and Champ of Champs, my PIC partner in crime. And today we're going to talk about tax strategy highlights for 2025. Obviously, this is the tax portion that we talk about in our 5 critical elements. And so if you're looking to figure out what this is, if you're new to the channel, please go back and look at the video we had done on what Elements of Focus is. It'll give you a nice highlight of what we're trying to achieve in our discussions today. Looking at our annual tax planning, tax strategies, right? Everyone wants to talk to Aaron and I about what's going to happen to the Tax Cuts and Jobs Act as it sunsets. And we're about as far away from an answer as anybody. But what we wanted to bring our focus back to is what we can still control today in 2025. Because folks, the getting's still good. And so there's a lot of things that we don't want to leave on the table because we're so focused on what the future holds. So Aaron, what are some of those strategies and what are some of those highlights we want our families and friends to be paying attention to?
Thank you, Grant, for the intro and the setup as always. Just looking at this, and this strategy for 2025 is pretty much wash, rinse, and repeat of what we've done the last several years since the Tax Cuts and Jobs Act was put into effect in 2018. A couple main changes this year. There's been some bumps in your standard deduction. So married filing jointly, you get a little bit of an increase in your standard deduction. Things that we're paying attention to, and as Grant alluded, we don't know what's going to happen with the tax cuts that have been passed. There's a lot of year left, and so we are operating as if the tax code will in fact sunset in 2026. And so some of the things that will take place is our tax brackets, our marginal brackets, will go back to the pre-TCJA levels. So the 12% bracket will go to 15, the 22% bracket will go to 25, the 24% bracket goes to 28, and then all the way from the top bracket going from 37 up back to 39.6. Things that we want to pay attention to are Roth conversions. We've been doing those year after year after year. Knowing that the tax code has been, for lack of a better word, on sale. Our tax rates have been lower, so we've been doing a lot of IRA to Roth IRA conversions. Right now is reevaluating what capital gain situations look like. So if there's been some stress or a little bit of down market time so far this year, looking at potentially reallocating assets that don't have as large of capital gains, and then just really paying attention to the types of credits that you can get for savers credits, credits for contributing to your 529 plan here in the state of Indiana. You can get a 20% tax credit on a $7,500 contribution. So you can get essentially a $1,500 state of Indiana tax credit by contributing to the 529 plan. And then lastly, making sure we're paying attention to any sort of charitable gifting strategies that have to be done prior to the end of the year. So as mentioned, we're still kind of in the waiting period of what's going to happen with the tax code. And so here at FEG, we're all systems go on continuing to do Roth conversions and making sure that we're doing tax efficient planning. Grant, anything that I missed in that general highlight for the year?
No, and it seems boring, folks, for us to kind of just be continually talking about the rinse and repeat strategy. The downside is, it's not flashy or sexy, but the positive is this: it works. And when you look back 5 years from now, when we looked at the getting that was good, and we actually jumped on the hard work to get where we are and pay the taxes today, that's when you see the compounding effect. It's not when you have to write the check, or not when it's the boring strategy, but down the road when you see the effects taking place. Aaron, you did a good job of breaking through those highlights. So folks, this is a big year. Could be one of the last we have the opportunities we do. So let us have a conversation with you. Let us connect for a next steps meeting. Reach out to us, 800-928-4001. Schedule that complimentary meeting. And we truly mean that. It is complimentary. We want to leave you with things you can think about today that'll impact your situation positively. Things you can do tomorrow, and then if we work together, we'll have that plan that we'll review every year. We'll talk through what those steps look like. You can even shoot us questions as the tax strategies and tax planning begins to wrap up at the year, or even as you're thinking about it today, at yourlifeafterwork.com, or talk to me at yourlifeafterwork.com. But we thank you for the time, as always. Aaron, thank you for your wisdoms, as always. And friends, we look forward to seeing you in the next one. Take care and have a good day.